Volkswagen gonna buy Tesla, $500 billion deal. Few other inventions have affected humanity so quickly in such a short period of time other than cars. Most importantly, it completely revolutionized transportation, making both short and long distance travel easier and faster. In fact, there are more cars in the world than people now. Volkswagen is the biggest car company in the world with a total revenue equal to that of the total valuation of Tesla. Since the birth of Tesla, the automobile sector has revolutionized, and Tesla's been growing since then. So can Volkswagen become the number one in the EV market, or will Tesla continue to dominate it? Hey everyone, welcome back to TechVerse, where today we are talking about Volkswagen versus Tesla. Are you ready to know all about it? So without delaying any further, let's get started. And make sure you hit the bell icon so you don't miss out on any new updates from our channel. If Tesla is the Apple of electric vehicles, Volkswagen is betting it could be Samsung. That's what the world's largest car company is trying to do. Electric does appear to be the future, and Tesla is leagues in advance of the conventional automobile makers in this space. Their generation is massively underrated. When it involves electric-powered motors, batteries, charging, and generation all play a giant function in the EV marketplace success. The big electric three, as I'll name them, are Volkswagen, Ford Group, GM, and Tesla. And a fourth name, plus one, that's Daimler. They'll be the four biggest worldwide electromobility producers of the 21st century. They can be the important thing for those drivers who will dominate markets, compete fiercely in opposition to every different and shifting forward, and will no longer permit extra opposition to reduce the marketplace share. The electric car no longer requires large global markets of many manufacturers like gas cars have, and very soon it will not. Because of this, many manufacturers will either give up, go insolvent or bankrupt, or back out and stick to the other businesses they have, or maybe manufacture something else. Sales of electric vehicles have increased significantly in recent years due to factors such as government subsidies, the perception of electric vehicles as a fad, and the falling cost of purchasing electric vehicles. This trend is evident not only in the US but also in other markets, such as sales of electric vehicles including hybrids increasing in China, as it's become the world's largest car market in recent years. Although the growth rate in 2019 was not very high at 9% compared to 2018, it increased over 2 million by 2019. In 2020, electric vehicle sales are expected to hit a record high after sales of electric vehicles in the first 3 quarters of the year were already 1.8 million, or about 2.4 million for the year. But that means it's still only a small part of the global automotive industry. Even including hybrid vehicles, only 1 in 30 electric vehicles are sold, so the share of electric vehicles in 2020 is expected to be about 3%. Years and decades to come. This is based on the fact that many EV startups will launch their products in the coming years. The changing and charging infrastructure will be built at the same time, making EVs a more user-friendly vehicle type. Pure EV stocks, including Volkswagen. The future growth of EV space seems to have already been factored in. Top players in this area have a total market cap of approximately $1 trillion. The most ambitious companies in this regard are probably Volkswagen AG, the parent company of Volkswagen, Audi, Seat, Skoda, Porsche, and Lamborghini. In total, the group sells about 10 million vehicles a year, most of which are still internal combustion engine vehicles. The two companies, Tesla and Volkswagen, are never the same size, so it's not easy to compare. Still, it makes sense to take a quick look at both companies' profit margins and see potential earnings drop significantly. Still, the company's been down for most of its recent quarter at 32. It generated an operating profit of about $4 billion with an operating margin of 5.5%. That's not excessive, but it's still a very solid result given the impact of the pandemic. By comparison, Tesla posted an $800 million operating profit in the third quarter with a 9% operating margin. As a result, Tesla's fared well on the profitability front, at least in the most recent quarter, although comparisons have been marred by the impact of the pandemic and Tesla's perception of its ZEV credit sales. However, on a net profit margin basis, Volkswagen had a net profit margin of 4.8% in the third quarter, while Tesla had a net profit margin of 3.8%. Overall, the two seem to be making about the same amount of money for now, but they could change slightly over the next few quarters. Access to capital is critical for companies that want to become number one in the electric vehicle industry in the next few years when the electric vehicle market's much higher. There are several ways to raise capital, and both companies are leaders in at least one of them. Volkswagen's clearly ahead of the traditional way of raising capital through operating cash flow. The company's a good company with decades of history and benefits from ultra-low interest rates in Europe. However, Tesla has an advantage when it comes to access to capital through equity issuance. Tesla shareholders don't really care about valuations, dividends, or dilution. Instead, the secondary issuance did not affect Tesla's share price, as the shares are traded primarily on the basis of an intact history. One of the main arguments against Tesla's performance cars is the lack of build quality. Tesla's failed to maintain reliability at the upper end of the scale, a key goal for any luxury manufacturer eager to significantly increase market share. Today, most of Tesla's customers rely on technology. Don't worry too much about reliability or rust issues. With a wider range of EVs on sale, Tesla will have to convince a group of potential customers to buy more. Many of them handle mundane things like reliability and rust, so Tesla's lack of manufacturing expertise and quality issues can be a headwind. Having built so many cars around the world all over the years, routine things like reliability, quality control, and rust protection shouldn't be barriers to the company's success. For large companies, a good relationship with politics can be important, such as regulation and building new factories. I think Volkswagen's ahead of Tesla in this regard. Tesla's very vocal CEO, Elon Musk, has had frequent feuds with California politicians, which of course doesn't bode well for the company. Doing business in a state or country where politicians are agitated is not as easy as doing business in a state where politicians have good relationships with your company. Volkswagen's good at home politics, unlike Tesla. In fact, Lower Saxony, where Volkswagen is headquartered, is the main shareholder. Of course, this means that the interests between shareholders in the country are highly aligned. This cannot be said about Tesla in California. Given its long-standing presence in the domestic market, Volkswagen could also have better ties in China, the world's largest car market. Tesla's a relative newcomer and has few connections. Tesla is the market leader in electric vehicles, which is possible because of the large investment in factories on several continents. The company operates factories in the US and China and is building another in Germany. However, it doesn't look very ambitious when compared to Volkswagen's plans for the next few years. We don't look at it as Tesla overtaking other companies, but rather other companies trying to catch up and contest Tesla. EVs are the future, and having this sort of lead is simply huge. Tesla will stay on top of the EV game for a long time until other car companies can produce EVs that have comparable technology and infrastructure. Currently, Tesla's the king of the electric vehicles, but this could change as more legacy automakers enter the market. Volkswagen's been the most ambitious so far, and there are big plans to connect with politicians, generate cash flow, and more. The fact that Tesla's already been ousted in Norway is what some people think is the model electric car market going for. So, folks, smell the coffee and relax, because the traditional car market's at its end and EVs are going to take over. That's it for today's video, guys. We hope you enjoyed it. If you have any comments or questions for us, make sure you share them with us in the comment space below. And of course, don't forget to click on that like button and share our video with all your friends and family. You can also subscribe to our YouTube channel, where you'll see even more of our incredible videos picked out just for you. Yeah, follow our links and make sure you hit that bell icon to stay notified of our new updates and uploads, and you can always stay in the know with us. Hey, we'll catch up with you in our next video. We sure appreciate you spending time out of your day with us today, and have a great rest of your day. Thanks for watching.